Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zittis, and this week's title is Gold Traders Anticipate the FOMC Meeting. Gold's price eventually rebounded higher yesterday after moving in a sideways motion for most of the time during the past week. After the latest upward movement, gold traders could be preparing for a more unclear week ahead with major economic events and a rather uncertain market reaction expected. The most important topics related to the gold market at the moment will be briefly considered through this report. At the same time, our goal is to look into what the possibilities are for gold to move in certain directions. One of the major factors currently supporting gold's price is the overall market sentiment remaining mostly bearish on USD. According to the dollar index that monitors the greenback's activity against other major counterparts, the currency has headed lower in the past days with not much action on economic releases from the past to the present week so far, giving traders very little to work with. This is the scene so far until Tuesday's European morning, but we can never underestimate the strength of the USD and its unpredictable nature. The USD usually keeps an adverse relationship with gold's price, thus gold traders are usually interested how the political and economic scene is playing out in the US. According to a report by Bloomberg released in the past days, the possibility of the announcement of a new fiscal stimulus package in the US remains subdued. Democrats and Republicans do not seem to agree on the exact amount to be passed, and the matter does not seem to be agreed upon anytime soon. The views of the two parties are far apart, and the amounts considered create a huge gap. This could also be an indication of a mixed outlook in the economy at the moment, which does not seem to support the USD in any case. Please note that any further developments on the topic could create substantial volatility for gold's price. Furthermore, gold traders turn their attention on Wednesday's FOMC interest rate decision. Whatever the outcome of the meeting, it is expected to create substantial volatility for the financial markets, and traders should be aware that gold's price could move extensively throughout the event. Depending on the outcome of the overall FOMC meeting, and due to the fact that it will also be accompanied by a press conference and the dot plot projections, the effect on the market could be extended into the following days of the report. Traders are advised to be very cautious if they choose to engage the market. On the other hand, strong market movement usually provides the opportunities necessary for traders to make moves. Other economic events from the US that could move gold's price upon release come on the 17th of September with the US housing starts for August, the weekly initial jobless claims figure, and the Philly Fed business index for September, while on Friday the 18th we get the preliminary University of Michigan sentiment for September. On a different front, the Brexit matter is becoming more and more a thorn for the UK's future relationship with the EU. It could be pragmatic to assume that global trade is at risk as long as no deal is formed, and gold traders may be willing to buy safe haven gold for hedge purposes. As a conclusion, in our opinion, gold and other precious metals could be heading for a roller coaster ride on Tuesday, as the market's sensitivity to expectations and unexpected views on the US economy will most probably be displayed. Moving now to our technical analysis, this is gold's 4-hour chart. Gold has gained approximately 20 USD in value since our past report in the previous week, and is now trading between our S1 1955 support line and our R1 1975 resistance level. If the upward movement continues, then the R1 could be breached, setting the road for the R2 1990 line to come into play. The R2 was last seen on the 1st of September, and the breach above it would signal a monthly high. On top of that level, we would also know the R3 2010 hurdle as our target in an extensive bullish run. In a selling scenario, gold could initially test the S1 1955 level. Lower, we have noted the S2 1940 as the next possible stop, with the recent activity seen in the previous week nearby the specific line. Our lowest level for this report is the S3 1920 support level, and was last tested on the 9th of September. Referring to the metal's trading activity in September, gold has been moving in a sideways trend and has tested all our levels except the R3 2010 line. Please note all our pre-mentioned levels in this report could be tested and breached due to the upcoming FOMC and the unpredictable turns the event has produced in the past. That's the end of this report. We hope you enjoyed it as well as found it useful. Thank you very much for your time and enjoy solid trading.